Hey there, Mike Ferrossi for Super Loans coming to you today with one of the most common questions that any mortgage professional or real estate professional gets in the industry. It's asked all the time, and that question is, can I buy a house or can I get a mortgage with bad credit? This is kind of an impromptu video. I wasn't planning on recording this one today, but I figured I'd just turn the camera on and talk to you person to person because this is one of my favorite topics to discuss. And the reason it's one of my favorite topics to discuss is because the point that I like to make all revolves around one central idea that's kind of a secret. And I want to let you in on it. Come a little bit closer. Little bit closer. There's no such thing as bad credit. Yeah, you heard me right. There's no such thing as bad credit. See, good and bad are subjective terms. The definition of good credit and bad credit can change from person to person, company to company, credit scoring model to credit scoring model. There's a lot of different credit scoring models out there. Some are consumer credit scores, some are created by the credit bureaus who report all of your trade lines and payment history themselves. And the most common credit scoring model, the one that's used in the mortgage industry anyway, is the Fair Isaac and Company, or FICO, F-I-C-O. A lot of people have heard about FICO score before. That's usually the credit score that's used to qualify you for a loan. And that's the key term, qualify. Now, imagine that you're somebody who has a 800 FICO score, and then they get a couple of bad breaks, they fall in hard times, their payments start slipping on a few things here and there. The next thing you know, their credit score is 660. Well, going from 800 to 660, that person might think that they have terrible credit now. Now, put yourself in the opposite shoes. You have a 480 FICO score, and you're just scratching and clawing to get by. You miss payments on the regular, but you know what? That happens sometimes, and that's okay because you have a plan in place, and you're going to catch everything up, and you're going to start improving. Fast forward 6, 8, 10, 12 months ahead, and now you have a FICO score of 640. That's a huge improvement. And you may think that you have an excellent credit score. So here you have two people, one who thinks their 660 credit score is horrible and one who thinks that their 640 credit score is excellent. This is exactly why we can't concern ourselves with whether or not you have good or bad credit, or a good or a bad credit score. Everybody thinks a little bit differently, and they come from a different place when it comes to this type of thing. So, qualifying. That's what you need to do to buy a home. You need to qualify. That's what you need to do to get a mortgage. You need to qualify for that mortgage loan. So why does good and bad credit matter? All you need to buy a house or get a mortgage is qualifying credit. And that qualifying credit score is going to differ depending on the loan program that you end up going with. Your most common type of loan is going to be a conventional loan, and conventional loans require a 620 credit score to qualify. You can also use a government-backed loan, like an FHA loan or a VA loan. FHA and VA loans have much different minimum credit scores. Typically, your minimum credit score to qualify for an FHA loan, which is available to everybody, is just 580. You can easily buy a house with just 3.5% down, or you can easily get that refinance into a lower rate and payment that you need to make life a little bit easier with a 580 credit score. It doesn't take Herculean credit scores to get a loan. You just need a qualifying credit score. And not a whole lot of people know this, but the FHA, Federal Housing Administration themselves, they actually don't even have a minimum FICO. That 580 is typically imposed at the lender level. Lenders usually like to see a 580 to give somebody an FHA loan, but there are lenders in the country, there's not a whole lot, but they're out there who will qualify you for an FHA loan with FICO scores as low as 500 or maybe even no FICO score at all if you haven't had a chance to build up your credit yet. There may be alternative means for you. So don't let that dissuade you from pursuing home ownership or pursuing that cheaper monthly payment with a refinance. VA loans, which are available to active service members of our military and veterans, they differ a little bit from FHA loans. Sometimes you may find a lender who will give you a VA loan with a 580 FICO score, but you're usually going to be in that 620 to 640 credit range like a conventional loan would require. Do yourself a favor. Let your fingers do the walking. Get on Google like I did. Do a search for what is considered a bad credit score or what is considered a good credit score. What you're probably going to find, if you find the same thing that I did, is that the top results you get from the most reputable places for this information are all going to disagree with each other slightly. If they can't come to an agreement on what a good or a bad credit score is, what chance does anyone have at determining what a good or bad credit score actually is? And that's why I wanted to talk to you about the subjectivity of those words, good and bad, and how they really should never be applied to someone's credit. Because the only thing that your credit is good for is to prove that you're more than likely going to make the payments on the next loan you get. And when it comes to a mortgage or a car loan, or even getting a new credit card, the higher your score is, the better your past credit history is. And that gives a good idea, a decent look at what you're going to do in the future. Typically, if somebody has always paid their bills well, they're always going to keep paying their bills well, and vice versa. That's a horrible generalization because everybody is different. We're not going to talk about whether credit scoring models are flawed or out of date because that's an hours-long conversation for another time. But as things work right now, you don't need excellent credit to buy a house or get a mortgage for any sort of a refinance that you want to do. And even if your credit would be considered bad by some, or even bad by many, who cares what they say? Let's get good and bad out of our vocabularies and just worry about whether or not we have qualifying credit, because that's what it takes to qualify for a mortgage so you can get your refinance or purchase your home. Nothing more, nothing less. Now, if you're in the market for a home, I have one more tip just for you. It's March of 2022 as I record this, and the market is crazy. The number of homes listed for sale is at historic lows, and home buyers are coming across competition everywhere that they look. Multiple offers, bidding wars, it just doesn't stop, and there seems to be no end in sight. It can be very frustrating. And in an effort to get buyers' offers accepted by the sellers of those homes, some real estate agents are advising that buyers waive all contingencies. Now, not a whole lot of people even know what that means. And it could get you in a lot of trouble because there's a lot of risk involved in doing this. So to see exactly what contingencies are, what different contingencies exist, and what type of risk you would take on by waiving them, check out this video right over here. And if anybody out there wants a customized quote for your upcoming refinance for a lower payment, cash out, or both, or you just need a simple pre-approval so you can start your house hunting, check us out at superloans.com. Because with Superloans, great rates have never been so simple. We'll talk to you soon.